Mr. Buffett and Mr. Munger, thank you for taking my question. My name is Feroz Qayyum, and I'm from Mississauga in Canada, and now live in New York. My question is how to best emulate your success in building your circle of competence. Given the environment today in investing is a lot more competitive than when you started out, what would you do differently, if anything at all, when building your circle? Would you still build a very broad generalist framework? Or would you build a much deeper but narrower focus, say, on industries, markets, or even a country? And if so, which ones would interest you? Thank you.
Yeah, well, you're right. It is much more competitive now than when I started. And you would, when I started, I literally could take the Moody's Industrial Manual, the Moody's Banks and Financial Manual, and I could go through page by page and at least run my eyes over every company and think about which ones I might think more about. It's important. I would just do a whole lot of reading. I'd try and learn as much as I could about as many businesses, and I would try to figure out which ones I really had some important knowledge and understanding that was probably different than overwhelmingly most of my competitors, and I would also try and figure out which ones I didn't understand, and I would focus on having as big a circle as I could have, and also focus on being as realistic as I could about where the perimeters of my circle of competence were. I knew when I met Lorimer Davidson in January of 1951, I could get insurance. I mean, what he said made so much sense to me in the 3 or 4 hours I spent with him on that Saturday. So I dug into it, and I could understand it. My mind worked well in that respect. I didn't think I could understand retailing. All I'd done was work for the same grocery store that Charlie had, and neither one of us learned that much about retailing, except it was harder work than we liked. And you've got to do the same thing, and you've got way more competition now. But if you get to know even about a relatively small area more than other people do, and you don't feel the compulsion to act too often, you just wait till the odds are strongly in your favor. It's still a very interesting game. It's harder than it used to be. Charlie?
Well, I think the right strategy for the great mass of humanity is to specialize. Nobody wants to go to a doctor that's half proctologist and half dentist, you know. So the ordinary way to succeed is to narrowly specialize. Warren and I really didn't do that, and we didn't because we prefer the other type of activity. But I don't think we can recommend it to other people.
Yeah, it was a little more treasure hunting in our day, and it was easy to spot the treasure.
We made it work, but it was kind of a lucky thing.
Yeah.
It's not the standard way to go.
The business, at least I best understood, actually was insurance. I mean, I had very little competition. And I went to the insurance department in Harrisburg, Pennsylvania. I remember one time I drove there just to check on some Pennsylvania company, and this is when you couldn't get all this information on the internet. And I went in and I asked about some company, and the guy said, "You're the first one that's ever asked about that company." And there wasn't a lot. I went over to the Standard & Poor's library on Houston Street, because they call it, and I would go up there and ask for all this obscure information, and there wasn't anybody sitting around there. They had a bunch of tables that you could sit and examine things through, and so there was less competition. But if you know even one thing very well, it'll give you an edge at some point. It's what Tom Watson Sr. said at IBM. I'm no genius, but I'm smart in spots, and I stay around those spots. And that's basically what Charlie and I try to do, and I think that's probably what you can do, but you'll find that those spots.
Yeah, we did it in several fields. That's hard.
And we got our head handed to us a few times, too.
Hi, Warren and Charlie. My name is Rob Lee from Vancouver, Canada. Could you please share with us what do you value the most in life now? Thank you.
Well, I like to have a little more of it.
It's the two things you can't buy, time and love. And that I value those for a long time. And I've been very, very, very lucky in life in being able to control my own time to extreme degree. Charlie's always valued that too. That's why we really wanted to have money, was so we could do what we damn pleased basically in our life. It wasn't 6 houses or boats or anything. Well, Charlie's got a boat, but it doesn't do us that much good. But time is valuable, and and we are very, very lucky to be in jobs where physical ability doesn't make any difference. And we've got the perfect job for a couple of guys with aging bodies, and we get to do what we love to do every day. I mean, I literally, I could do anything that money could buy pretty much, and I'm having more fun doing what I do than doing anything else. And Charlie is designing dormitories, and I mean he's got an interesting life, and he brings a lot to it. He still reads, more books in a week than I get done in a month, and he remembers what he reads, and so we've got it very good. But we don't have unlimited time, and whatever we do to free up the time to do what we like to do, and we both maximize that in our lives, we do.
Anybody's lucky if he gets what he spends his time at he really likes doing. That's a blessing.
Yeah, we've had so much good luck in life. It sort of blows your mind. Starting with being born in the United States, and Canada would be fine too, incidentally. I don't want to offend anybody.
Good afternoon. My name is Tony McCall, and I'm from Montgomery, Alabama. And my question is about your discipline risk evaluation approach and how you balance that with the fact that perseverance and determination and grit are often necessary for success.
Well, I'm not. I certainly like determination and grit with the people we work for, but we don't have any formula that evaluates risk, but we certainly make our own calculation of risk versus reward in every transaction we do. And it's true whether it's marketable securities, that's true whether it's private investments, that's true whether it's making an investment in a business. And sometimes we're wrong, and we're going to be wrong sometimes in the future. You can't make a lot of decisions in this business without being wrong, but we don't think the procedure or the results would be changed favorably by having lots of committees and lots of spreadsheets and that sort of thing. It just, if I had a group under me, they would try and figure out what I wanted the answer to be, and they would tell me what I wanted to hear. And I've watched that approach at 20 public companies, and what the CEO wants to do, they may spend a lot of time getting there, but the investment banker gets there, and the internal committees get there, or the internal operations get there. The calculations are it's the same as the insurance business with a G. A G gets calls on insurance deals, and you have to think through that deal. The main thing is, are you reasonably sure that you know what you're doing? And if it gets past that hurdle, then we go on to figure out the math of gain versus loss and how much loss we can afford to take in anything. And we're willing to take what sound like large losses if we think that the rewards are more likely and proportional. Charlie?
I got nothing.
Yeah, it's very disappointing. We have no formulas around Berkshire. We don't sit down and write a bunch, have people work till midnight calculating things and putting spreadsheets together. And if the hurdle rate is 15% or something, having them all come out at 15.1 or 15.2, because that's what's going to happen. I mean, you're going to get the numbers you want to hear to an extreme degree. The